Hello, everybody, and welcome to VRIC Media, the most trusted voice in junior mining. Our flagship event, the Vancouver Resource Investment Conference, is coming up January 19th and 20th at the Vancouver Convention Center. A ton of fantastic guests and keynote speakers. Best of all, it is free to attend, so get your tickets by clicking the link in the description below. But of course, we are bringing the VRIC to you each and every week with our series of expert online panels. I'm very excited for the one we're bringing to you today. I have our guest, Steve Hanke, a renowned economist, professor of applied economics at Johns Hopkins, and author. His latest book, Capital, Interest, and Weighting: Controversies, Puzzles, and New Additions to Capital Theory, is available now. Steve, it's great to have you on the show.
Good to be with you, Jesse.
Yes, I want to start off with the incoming Trump presidency. I want to get your thoughts on the effect of the Trump administration, good or bad in your view, on the U.S. economy, financial markets, and the debt and deficits issue.
Well, I think the main thing to think about is Trump himself, because Trump's running the show. There's no question about that. I think for many things, Trump has a jumble of contradictory ideas on the same subject, all of which he superficially understands at best in his head at any one point in time. And let me just indicate what he's thinking is about currencies to illustrate this particular point. He's threatened the BRICS countries, if they don't use the US dollar, in other words, if they start with some substitute, he's going to slap 100% tariffs on them. So on the one hand, he said, you have to use the US dollar. But on the other hand, they're members of BRICS that the US has sanctions on, and they prohibit the use of the US dollar, like Russia, for example. So that's a contradictory thing. Also, he's peddling cryptos. You know, we're going to be the crypto capital of the world, supposedly. Well, he's talking about substituting cryptos for the US dollar. Well, I thought he wanted everybody to use the US dollar. So this is a typical Trump mindset, shall we say, where he has a lot of things in his head. He doesn't really understand them very well. Many of them are totally contradictory. You can't have all of them at the same time. And so the question is, well, at the end of the day, how does these things fall out? And it's the art of the deal. He'll have all these things in his head, and the art of the deal is it depends on what happens and who's on the other side of the table when he's doing a deal. So it's very unpredictable and very unclear, actually. Now, for other things, however, he has one idea in mind, and one of those that's important is international trade. He's a mercantilist. He's never seen a trade restriction that he didn't like and grab onto. So that's one thing where there aren't a lot of contradictory ideas in his head. He has one idea in his head. It happens it's a bad idea, but there's one. The other one is a good idea, and that is to reestablish U.S. sovereignty and put some order in what's going on at the border. That's a good idea, but that's one idea, and he has no other ideas about it. You can call it closing the border. I don't think I'd call it closing the border. I would call it just securing the border and putting order back in the border. Another thing that he just announced that's dear to my heart, one idea, is to get rid of daylight savings time. Now, I've been campaigning and trying to convince Trump that he should get rid of daylight savings for over 6 years. Dick Henry, who's a professor at Johns Hopkins, an astrophysicist, famous astrophysicist, and I have actually a website called Hanke Henry on Time. People can go to it. And one of our interviews in August of 2019 was with Fareed Zakaria at CNN. We had a long interview, and at the end of that thing, we were advocating, which we always do, universal time, which would mean you'd get rid of daylight savings time. And as Fareed said when we wound up that long interview with him, he said, I think maybe you could sell this thing. Let's just call it Trump time. So that's kind of a summary. So the key to the thing is try to understand Trump. So I've given you my take on some of the big items. His ideas about currency are a jumble and don't make any sense at all. We also have his ideas about securing the border. That's one idea that's good. Another one is daylight savings time. That's a big deal, by the way. And one of the main things people don't realize, switching your clock, daylight savings has enormous health problems associated with it.
I've heard that, yeah.
And it creates a tremendous amount of confusion and so forth. And then, of course, a bad idea that's a single idea is mercantilism and trade restrictions. That's one idea that he has is bad. So I've given you kind of a thumbnail sketch as I see it.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode.
Yeah, great breakdown, and absolutely agree with you on daylight savings. It's completely insane to be doing that in this day and age. It's super annoying for me living in Europe because we put our clocks forward and back like a week before you guys do in America. So it's just a nightmare trying to schedule guests and figure out what's going on around that time. Very inconvenient. I want to dive into.
By the way, you mentioned Canada, and I had by invitation, I wrote an op-ed with Caleb Hoffman, one of my assistants, in the Toronto Star on daylight savings. That's published about 2 weeks ago. If you want to put a link in that, it's very current. It's before Trump actually announced what he was going to do, but they have an interest in Canada in getting rid of daylight savings time.
Well, I'll put a link to that in the description below. I want to talk about Elon Musk for a moment because I logged into my X account the other day and I was fascinated to see along the trends section, economist Steve Hanke, I forget what the exact headline was, fires back at Musk on inflation. It was something like this. There was a controversy kicked up, a bunch of people replying to you. Talk to us about what happened there. What was the disagreement you had with Musk?
Musk will be heading with Ramaswamy, this government efficiency, Department of Government Efficiency in the United States, which even the title of that thing is kind of a contradiction in terms. I mean, you can't make a government efficient. This doesn't work that way. But at any rate, so Musk said that government spending caused inflation. And I responded by saying, no, that's not that's never been the case. Inflation is always a monetary phenomenon. It's caused by increases in the money, substantial increases in the money supply. Then go through a transmission mechanism, and after about 12 months or 24 months, maybe even 3 years, you get inflation. So the causality of inflation is it's changes in the money supply. So his confusion, he's looking at increases in the government spending that occurred right after COVID, and he says, well, government spending increased, and then by 2021, 22, we had inflation, big increase in inflation. That's a post hoc fallacy. Just because something comes before something else doesn't mean that the prior activity or thing was a cause of what follows. What happened is government spending went up and the deficit soared, and the Treasury had to issue more bonds, and about 90% of those bonds were bought by the Federal Reserve. That's why the balance sheet of the Federal Reserve expanded and the money supply expanded. And it was the money supply that caused this. Now, let's go through most people just have this all confused, including Musk and Ramaswamy. Let's assume that the government expenditures go up, but let's assume that also taxes go up to finance the government expenditures, and there's no deficit. Well, there's going to be no change in the money supply, and there's going to be no change in inflation. Let's go through another scenario. Let's assume the government spending goes up and the deficit goes up, but instead of selling 90% of the bonds and having them monetized by the Federal Reserve as central bank, those bonds are sold to the non-bank public. If they're sold to you, Jesse, and they're sold to Hanke, what do? We write a check for those bonds, and our checking accounts go down, and actually the money supply goes down. It doesn't go up. So the government spending thing is something that most people just don't understand it, and most people don't understand that there's one and only cause always and everywhere for inflation, and that's changes in the money supply. I know of no case where significant inflation has occurred, and let's define that as being a 4% per year inflation that lasts at least 2 years. There's never been a case where that hasn't resulted as a result of substantial increases in the money supply that occurred prior to that increase in inflation. So that was what that flap was all about, and we're still engaged in the thing. I'm educating Musk. I mean, he might be the world's richest man and a very clever entrepreneur, but economics happens to be my field, not his field.
Yes, absolutely. I want to talk a little bit about what's been happening on the geopolitical stage at the moment. Obviously, we saw some very interesting events take place recently. The fall of Assad's regime in Syria, which happened a lot faster than I think most anticipated that it could have. Things ramping up when it comes to the Russia-Ukraine conflict. Ukraine striking inside Russian territory with U.S. supplied missiles, and of course, most likely their satellite data as well. What are you watching right now most when it comes to the geopolitical drama unfolding? What do you think people should be paying the most attention to? What has you concerned?
Well, everything has me concerned. We've never had this many unstable instabilities occurring at the same time. You mentioned the war in Europe, and you mentioned also, let's say, the broader Middle East war and military activity and aggressions of the Israelis, and completely unknown of what's going to happen in Syria. I mean, it's going to. I think it could end up in a completely chaotic situation. And don't forget, the big thing is the commercial war, if not geopolitical war, that the U.S. is in with China. You have the two biggest economies in the world are at loggerheads. So everything is, well, oh, and just another little thing. How about Sudan? We got a big war going on in Sudan. We have a huge number of casualties. We're going to have a big famine in Sudan. A lot of displaced people, a lot of people killed, and so forth. So everything is bad from that point of view. I would say I can't think of, well, now that I'm thinking about it, maybe the island of stability or quasi stability might be South America, but the U.S., remember, is on the attack against Venezuela, so we don't exactly know what's that to the extent that there's an equilibrium there. It's kind of an unstable equilibrium with the U.S. versus Venezuela. So let's go back to Ukraine, because Trump has indicated that he'd like to have that thing wound up as fast as possible. But the real situation is that the Russians have already won that war. Most people don't realize the Russians have won. And when the shooting stops and they come down to negotiations, what the Russian position is very clear. Number one, Crimea is part of Russia, and they're going to keep it. And the occupied territories in Eastern and the Donbass, they're going to keep all of those. And they're going to demand that Ukraine not be a member of NATO, either de jure or de facto. So that's the negotiating position that the winners of the war will be taking. And my conclusion is that that's going to be tough medicine for the West to swallow. And the negotiations on this are going to drag on for a long time. So if there is a peace and they stop shooting, it's going to be, shall we say, a Cold War, an unstable situation for quite some time. Trump is not going to wind this thing up in a hurry. And what has been the collateral damage associated with that? Well, Europe's economies have been destroyed by the war against Russia. And the other thing is that the fiscal situations in the European countries, many of them are in fiscal hot water. Just look at Germany. They've just had a no confidence vote. They've thrown out the government. They're going to have a new election in February. You've had the same thing a couple of weeks ago in France. And those are both because spending money at the margin for increasing defense, if you have no room or margin of safety in your budget, you're in trouble. Germany is tanked. Germany is in terrible shape, and France is in absolutely terrible shape. Moody's has downgraded them just recently. And if you look at the Eurozone and look even at the IMF forecast for the next 6 years, they forecast that the growth rate for the Eurozone will only be 1.25%, 1.25% annual growth rate, very slow. The U.S. at 2.2%. If you look at U.S. productivity versus the productivity in the Eurozone, the U.S., since a great financial crisis, the productivity here is up 30% more than in Europe, 3 times faster growth rate. So Europe is just in terrible shape, and I think the straw that is breaking the camel's back, no one really talks about, and it's the extra expenditures on defense and the war effort that the Europe's engaged in with Russia. So that's kind of if the big story about the war against Russia is how it's destroyed the European economies. And then we get into things that you and I are interested in. Why do you think the euro is so weak right now against the dollar? It's the war. So
Yeah, that makes a lot of sense.
all these warmongers are delusional. They're totally delusional. They don't even admit that Russia has won the war, and they want to keep fighting the war. Even the U.S., the Biden administration, they want to keep fighting the war, sending more and more money into for what? To have more Ukrainians killed, number one, and and more territory taken by Russia. That's what's going on. It's a losing proposition.
Well, let's switch over to investing and discuss specifically gold and commodities. First of all, what are your thoughts on gold here? How you expect it to perform in 2025? What are the catalysts that you think could drive gold higher? Are we in the early stages of a longer term bull market? Do you expect things to cool off here? What are your thoughts?
I think I remain a bull, and whether you define it early, middle, late, or it's the bull run will continue. What could really elevate things or change things is, I think, what really is in effect a bubble in the U.S. equity market. From an international point of view, 70% of the world's market cap is in the U.S. markets. The rest of the world doesn't count. This is amazing. And in 1980, the market cap in the U.S. was about 30% of the world's markets, which was kind of in line with the size of the U.S. economy relative to the rest of the world. U.S. economy is, it's about 27, 28, 29, 30%. Depending on how you measure it, but it's more or less, let's say, around 30%. And in 1980, the market cap was about 30%. Well, now it's skyrocketed. Everybody and their brother want into the U.S. market, and I think the U.S. market now is overvalued, and overhyped, and it's in a bubble. So when that bubble pops, you can watch gold take off again, accelerate. If you look at what's happening to gold, the last month it's up, the last 3 months it's up, the last 6 months it's up, year to date it's up, last year over year it's up. It's in a bull run, and it's going to stay in one that could be motivated if the U.S. equity markets pull back, which I think they will.
Well, let me ask you this then.
And by the way, one reason that I say that I use the word bubble is that when you get every dog and cat saying the same thing, that the U.S. is the only place to be, the U.S. is an overachiever, the U.S. this, the U.S. that, and we all want to rush into the U.S. That's when my contrarian juices get flowing, Jesse. So something is wrong. If everyone is saying exactly the same thing, it's about ready to pop.
And so are your contrarian juices leading you to non-US jurisdictions when it comes to the equities market, emerging economies or otherwise? Are you seeing value in other parts of the world that's maybe being overlooked by market participants?
In principle, yes. In practice, for me to give you any specific advice, I don't have any specific to give right now. If you would have been in Argentina, you would have been in good shape the last year. It's up big time.
Yeah. Well, what about when it comes to the commodities realm overall, looking outside of the gold space? Do you have any thoughts on energy, base metals, anywhere else in the commodities sector that you think could outperform up ahead?
I think you have to. China, of course, is the elephant in the room when it comes to commodities. So you got to watch China. Now, China has just made the Politburo last week made an important statement. They said that they wanted to have loosen up on the money, and they're right, because Hanke's golden growth rate for the rate of growth in broad money in China is a little over 11% per year. And that would be a rate consistent with hitting their inflation target of 3% per year. How fast is it actually growing? It's growing about 6%, way, way below. They're suffering from anemic growth in the money supply. So what the Politburo said is the right thing. They want to increase the money supply. Whether they're going to be able to pull that off or not, I don't know. But if they do, then that's a very positive sign for commodities. So that's on the positive side. Now, another thing that's positive and could create spikes is the geopolitical thing. If the U.S. keeps pushing them, they're going to squeeze the rare earths and the critical materials. They've been doing this, by the way.
Yeah.
Just in the last few weeks. Since August, they've been putting the squeeze on various selected critical materials. Just take antimony, for example. That first, they put a restriction on antimony. Then on December 4th, they put a ban on exports of antimony going to the U.S. What's happened to the price of antimony? It's gone up 70% since the restrictions in August. So which is it? What's another one that I'm looking at? Again, lithium is basically been wiped out, but it's going up. I think it's bottomed out, and will go up. And the consensus thinks it's going up. The difference I have with the consensus is that I think there'll be some upward spikes along the way, and we might very well get a big spike next year. So the lithium market has bottomed. I agree with the consensus. It's going up, but I think the consensus is missing the analytics and diagnosis of the market that will lead to occasional spikes as it's going up. So those are two. Again, watch the money supply in China is the key. The key is the money supply. Remember, if you change the money supply, what happens? Nominal GDP goes up. If you goose the money supply, nominal GDP goes up, and nominal GDP has two components: the real growth in the economy and inflation. But it takes time. There's a lag between the change in the money supply and when the occurrence of asset price changes occurs. They will go up first, then economic real activity will rev up a little bit, then inflation will rev up. So we have to watch that, because if it occurs in China and the money supply, they really do get it going, and they Politburo policy prescription, which is correct, by the way, if they actually can implement that, then China will be growing more rapidly, and inflation, by the way, will come up. Now it's non-existent. It's 0.2% per year inflation in China. It's way below the target of 3%. So if real activity starts, if the money supply goes up, real activity will go up, asset prices will go up, inflation will go up, and that's going to be very positive for all kinds of commodities. In addition to that, that's the demand side of the picture for commodities. The supply side could be very disrupted by China putting restrictions on various critical materials. You know what Deng said in 1991, I think, or 92. I can't remember for the year for sure. He said, OPEC has oil, China has rare earths. And by the way, since then, they've developed a whole set of strategic policies dealing with rare earths and critical materials. So they're locked and loaded. If Trump wants to screw around with China, baby, they're gonna hit back hard.
Very interesting.
And they've given him a little bit of a taste of what's coming down the pike, by the way. The U.S. is just totally behind the curve on this. They don't understand what's going on whatsoever. And they don't understand the fact that China totally dominates in what I call the three M's: mining, metallurgy, and material sciences. If you look at education in those fields and so forth, the top 20 universities in the world in those 3M fields they're all in almost all dominated by Chinese universities. Whereas if you look at the top 20 universities in the world in general, not in those special fields, China has nothing. They don't show up at all. So they've put all their eggs in the critical materials field. They dominate it, and they're going to use it as a weapon of war.
I wonder what your thoughts are right now on the fixed income market for investors who are looking for yield or a place to park cash. We're seeing, short-term T-bills drop in rates gradually, seeming like a less attractive place to get yield at this point in time. Do you have any thoughts on emerging market debt, corporate debt here, or anywhere else in the fixed income market?
Oh, I still like the key benchmark, the 10-year bond in the United States. I think is a good place to park money as a trade anyway, because you're getting good yield, and we know that yields follow inflation, and since the money supply has contracted in the United States since July of 2022. We know that what's going to happen. Inflation is going to keep going down. I think the CPI number, or the headline number, will come in at less than the target of 2% next year. Now, when that happens, of course, yields come down. Yields follow inflation. It's a three-step process. The first step is what happens to the money supply. The second step it will be inflation. That follows whatever's going on with the money supply. And the next step is yields, because yields follow inflation.
Interesting.
So that would be one place to park.
Yeah. And I want to get your thoughts, if you have any, on the situation currently developing in Canada. Finance Minister Freeland now resigning. The Canadian dollars recently hit, I think, at least 21-year lows on a monthly basis, at least, versus the US dollar. The economy is in shambles. Of course, we know about Trump threatening tariffs against Canada as well. What are your thoughts on what's happening in Canada now? And is it comparable to, you brought up Germany before and France, they're also seeing political turmoil and economic troubles. Is there any parallel you could draw between them?
Well, I think Trudeau is a left-wing incompetent, and to that extent, that's exactly what Scholz in Germany is. He's got a coalition with the Greens. They're very left, and they're very much into the green transition. Of course, they're big in fighting the war against Russia, so that's a little bit different than Canada. But I'd say generally, you have Trudeau has proven himself kind of a little bit of a clown, actually, but he's a lefty, a certified lefty, and so is his cabinet, and he's basically incompetent.
So how do you see that whole situation unfolding? Obviously there's a lot of talk that Trudeau's going to be out of power. There was rumors swirling that he was going to step down, and then now it appears that he's not. And how does Canada bounce back economically from the situation it's in right now?
Well, they have to change policy course. You got to get somebody in there that has a vision. Something. For example, as you know, I was one of Reagan's advisors. Somebody has broadly free market ideas and want to liberalize the economy, free it up, shrink the government, get the fiscal house in order. I mean, basically, just put some order in the government and shrink it. It's a shrink operation. Let the private sector or lose. Deregulate things. Don't overregulate. I mean, that's what Trudeau has done. He keeps interfering with private enterprise. And why do you think they call the loony?
Because you'd have to be crazy to own it.
Yeah, because you've got a loony running the government as a prime minister.
Yeah, that is very well said. Well, Steve, this has been a fantastic conversation. I greatly appreciate you coming on. Could you tell us about your latest book, Capital Interest and Waiting, and where people can get it?
Yes, I co-authored this with Leland Yeager, who unfortunately passed away before we got to the finish line. He was 93 when he met the Grim Reaper, and so the next 6 years, he would have been 100 this year. And so the next 6 years, I worked on polishing this thing up and getting it. Palgrave Macmillan is the publisher. I think you have a link to the Springer link that you might put up that has detail in it. So what's the idea? Capital interest and waiting. It's really a book on what we call in economics capital theory, but sometimes they call it capital and interest theory. And then we get waiting in the title. Well, what is waiting? And waiting is our new breakthrough to clarify the whole field. It's been in need of clarification probably for a century. It's a big field because capital and capital theory interfaces with what? Interest rates, monetary theory, the yield curve, all these kinds of things. But our finding is that we have developed the idea that waiting is a factor of production, interest is its price. Now, what's that mean? What are the factors of production for us? The factors are labor. If you put labor, that's an input, and you put land, that's an input, and you put waiting, that's an input. Now, what does that mean? Waiting is just deferred consumption. You don't spend all your income. You wait. You wait to receive your just rewards, and to wait, you got to get paid, and you get paid the interest rate. So how does this come into play? We talked about Europe and why Europe is in such terrible shape. And one reason is that Europeans, well, they don't wait. They don't defer consumption. They just consume everything, almost all their income. And why? Because they're in welfare states, and welfare states, it's a cradle to grave thing. The welfare state's supposed to take care of you, cradle to grave. So in that case, why should I wait? Why should I defer consumption? I just consume everything I make, and I worry about the government taking care of me. Now in the U.S., that's not quite the case. There's a lot of waiting that goes on, and you get paid to wait. And what happens when you wait? Well, if you wait, that generates a supply of loanable funds that banks, for example, can loan to bankable projects, and the anticipation of earning a positive rate of return on those bankable projects. And by making those loans, what happens, by the way? The money supply increases. Most people don't realize most of the money produced in an economy is produced by commercial banks who are supplying loans to bankable projects. And so this is how it all kind of fits together. And there are a million other things obvious in the book. It's really a treatise more than just a book. But if you want to understand capital, capital markets and interest and waiting as a factor of production, this is the book.
Great. Well, I'll put a link.
I'm delighted we finally pushed it over the finish line.
Great. Well, there'll be a link in the description below so people can pick up a copy. Steve, once again, always enjoy our conversations. Thank you so much for coming on the show.
You're welcome, Jesse. Now, remember, you mentioned you went to X in my account of X. It's at Steve_Hanke.
Great. I'll put that in the description below as well.
Got to, a good following, a lot of action. I think it's the third highest of any economist in the world right now. I'm just looking where we're at as long as I've got you here.
Yeah.
And look, yeah, we're at 773.5 thousand.
Well, let's get
773,500 followers. So there's a lot of action going on there, and as you see, if you get the world's wealthiest man interacting with you, that's, what can you say?
Yeah, absolutely. Well, let's bump those numbers up. I'll put that in the description so people can follow as well. Thank you so much, Steve.
Oh, thank you, Jesse. See you.